Hey, what's up, y'all? Welcome back to the Dividend Nomad. And today we're going to be breaking down the difference between dividend growth investing and dividend income investing, because they are two different things. And I know there's a lot of confusion because I keep seeing lots of people in the comments telling me, oh, you're doing this wrong and doing that wrong. And there's other people in the comments who seem to understand and like, oh, I like this and I like that, or don't like this, or there's lots of questions. So we're going to break down the difference of these today. I have a presentation to show you. So I'm going to take my big face off the screen and I'm going to put a presentation up for y'all. And we're going to go through this presentation together so you can decide which type of dividend investing is right for you based on your specific needs and your goals and what you want to do in life, right? But as for me, as the name says it all, the Dividend Nomad, I want income and I want it now so I can live anywhere I want to live and go anywhere I want to go. And right now, at the time of this recording, I am here in China. So let's get into the presentation. I'm going to put on my glasses so I can actually see what I'm reading. If you see me looking up, I'm just reading. I have a big screen in front of me, so I'm going to read off the screen here. So I can see now. So let's dive into my computer here and check this thing out. So here we are. Dividend investing, growth versus income. What's the difference? So the first one we see here, we have dividend growth, and the main focus of dividend growth is investing in select companies that consistently increase their dividend payments over time, right? So you're selecting individual companies and they have like a proven track record, something like a Pepsi or a Coke. And every year they increase the dividend a little bit and a little bit and a little bit more, a little bit more. The dividend yield is actually increasing. They might start at 1%, then later they're 1.2, then 1.5 or something like that, right? So that's the main focus of dividend growth investing, choosing companies that increase their dividends over time. Okay, so there's my big head. Don't pay attention to my face there, but so for dividend growth, the main goal of a dividend growth investor is investing in dividend growth stocks that benefit from both the dividend income, so they are getting some income, and they are getting some potential for capital gains, right? Capital appreciation. The stock price can go up and they can still receive dividends. And also, as I mentioned in the previous slide, that dividends grow, right? They might go up a little bit at a time, a little bit over time over the years. And so some of these stocks, they've increased their dividend like 5% a year, some 2%, some 1%. Some don't increase any, but the main goal of a dividend growth investor is to get some capital appreciation and some dividends and some dividend growth. Okay, so the next slide I'm going to show you are the characteristics of a dividend growth investor or dividend growth investing. So companies chosen for dividend growth investing tend to have strong fundamentals, like a Coke or a Pepsi, something like that. Procter & Gamble or Johnson & Johnson, some kind of thing like that, right? So they have strong fundamentals, stable cash flow, which means they keep paying dividends over the years for so many years, and they never stop paying the dividends, right? And they have a history of increasing dividends even during economic downturns. So when the economy is not doing good, these companies, because they're just been around for so long, they can still increase the dividend yield because they're selling products or something like that people always buy, like a Coke. If the economy's bad, people still buy Coke, right? So they can still pay the dividend and they can still increase the dividend percentage. This is a typical characteristic of a dividend growth stock. Okay, so let's dive in here to the next one. So the dividend growth investor profile. So these are the people who typically invest in dividend growth stocks. The strategy is often favored by long-term investors who seek to build wealth steadily, right? So slowly over time, year after year, they're going to be increasing their wealth. And the compounding effects of growing dividends can significantly boost the returns over the years, right? So basically, in year one, You get like $100. Year 2, you might get 200. Year 3, you might get 400 or 500, and so on and so on. And then after 30 years, you can live off of your investments, right? So it's steady increasing over many, many, many years. So, and at the bottom here, you can see the summary of a dividend growth investor, right? Or dividend growth investing. So dividend growth investors focus on slow, long-term capital appreciation and dividend growth. All right, that means the dividend yield gets higher and the stock price can go up, right? This capital appreciation, the stock price is going to rise, the dividend yield can rise, and your money will appreciate and get more and more over time. That's dividend growth investing. It's very slow, very boring, but it works. Okay, so now let's have a look at dividend income investing, which is what I am. I'm a dividend income investor, not a dividend growth investor. Dividend income investing, the main focus, as you can see on the left, dividend income investing prioritizes generating a steady stream of income from dividend payments. Okay, a steady stream of income, not capital appreciation. Okay, we're not talking about dividend yield growth income. That means money now, like getting paid. Okay, if you look on the right, dividend payments, not stock price appreciation. So a dividend income investor isn't expecting or anticipating the price of a stock to go up, right? That usually doesn't happen with dividend income investing. Usually the price will stay flat or the price will go down, but you will receive dividends. Okay, high yield investments have stock price decline. So for example, like Tesla, right? TSLY, it has 100% dividend. If somebody's going to give you a 100% dividend, of course, the price of the stock is going to go down, right? It will go down. The stock price will decline. Now, you see the last one, it says no NAV erosion. That's right, I said it. Everybody says NAV erosion, NAV erosion. The definition of erosion is to disappear. Nothing disappears. It's stock price decline, right? Because the price is going down. It's not going down because the stock is bad. It's going down because the yield is so freaking high. They're giving you all the money. It's not NAV erosion if nothing's disappearing. You're getting money, right? If you're not getting money, then that's erosion, right? If the price goes to zero and you don't get any dividends, that's erosion. But it's not erosion if they're paying you money every single month. So for example, TSLY doesn't have NAV erosion. It has stock price decline. The price is going down, but it's not eroding because they're giving the money to you and to me. Okay, so let's check out the next one. Dividend income investing, the goal, right? The primary goal of dividend income investing is to generate regular cash flow now. I don't want to wait 10, 15, 20, 30 years. We want income now. And the reason why we want that income is to supplement other sources of income or to provide a reliable source of income in retirement. Okay, read that carefully. Supplement other sources of income. So you have a job or a business and you're earning money from that. We're going to add more money to that by receiving dividends. Or we can rely on this money in retirement, right? We can live off of this money. So if you quit working and we want to get paid, we can rely on income investing to get paid. And you can even do some business on the side or something like that. It doesn't matter. But if you have enough money invested in income investments, they will pay you enough money every month to live off of. That's what retirees do. And you can retire at any age. I'm 42. I could actually retire now if I wanted to, if I put all my money in income stocks. But I'm working because if I retire and sit around and do nothing, then I might get bored. But when I say working, I do lots of stuff. I have some businesses and other stuff, but that's besides the point. We're not worried about that right now. Over here, we have the characteristics of income investing. Investors in dividend income stocks typically look for high yield dividends. Like I said earlier, TSLY, QQQY, etc. We want high yield. We don't want this 1, 2, 3% yield stuff that's going to take 30 years. We want high yield. And high yield usually means that they don't have consistent dividends or consistent increasing dividends, right? The dividend can fluctuate. Sometimes it might be high, sometimes it might be low. It's kind of moving around. And a lot of times, especially these new ones, it's going to be based on the volatility and also based on the strategy that, like for example, the cover call ETFs is based on the strategy they're using for cover calls. Are they, at the money, out of the money, something like that, right? So the next one at the bottom, you can see the investor profile. This is what type of person invests in these high yield income investments. So dividend income investing appeals to investors seeking passive income, right? That means we're going to put our money in, we're going to sit back and do nothing and get paid. Also, retirees looking for steady cash flow. So retiree, basically anyone who's not working and we want to keep getting paid even though we're not working. Or those with a more conservative approach, right? Income investing is more conservative because we're generating steady flow of income. When you're investing in, say, a dividend growth stock, if there's some headline risk, that one particular stock can just disintegrate. It can go to zero. There's more risk. You can lose everything. But with income investing, you're not going to lose everything because it's still paying you money. For example, like I mentioned before, and people hated it, was QQQY. The underlying is the index. It's the NASDAQ 100. The entire index is not going to go to zero. The worst thing that'll happen is the stock price will decline, but you've already gotten all your money back from all the dividends you've received. You've got 100% of your money back. You still own the asset. You still own it. If they do a reverse split, it don't matter. You still own it, and they will still pay you, right? So stock price decline doesn't matter. We just want the cash flow, and we want it now. So it's nothing wrong with wanting money now and not wanting to wait or have to sell shares or have $5 million invested to get $12,000 a year. Okay, next, I have a summary for you. So growth versus income summary. You can see here, both strategies involve investing in dividend paying stocks, right? Both of them are paying dividends. Dividend growth investing emphasizes capital appreciation through consistent dividend growth. So money slowly goes up, dividends go up. Dividend income investing prioritizes regular income from dividends through high yield investing, and regular income means money now. That's the difference. Money now, not money later. We don't want to sell our stocks later or wait 30 years. We want money now. That's a high income investor, right? Money now. So hope this clears things up. And hopefully this might give you some insight into the different types of investment instead of saying this person's wrong or that person's wrong. Because I'm not going on dividend growth investors pages and say, oh, you're doing it wrong. You can have money now. Maybe they don't want money now, right? And the same with me. Those guys are coming over here saying, oh, you're doing this all wrong. You should just invest in this or invest in that instead. I don't want to invest in that because I want my money now. I don't want to wait for my money, right? So we all have different ideas, different goals, and different things that suit ourselves and our own personalities. So I hope this just makes things a little bit more clear so you can decide what style is best for you, or you can implement both together at the same time, right? You can have high yield income paying stocks and also buy some growth ones, right? Or you can take dividends from your income investments and put it in growth ones, or vice versa, right? You can do however you want to do. There's no right or wrong. So I hope that clears it up. I hope you liked the video. Let me know your thoughts in the comments below. I appreciate it. Take care, and I'll see y'all on the next video. Thank you.